Hello and welcome to yet another live session inside our channel. Great to have all of you here. Today is very special session where I'm going to dissect all your doubts and we will go deep dive in terms of Technofunda concepts and Technofunda strategies. So let's begin this journey. Let's have some awesome questions coming on the way. I'll be answering all your questions wherever you are getting stuck or you want to know more. So if you are all ready for today's question and answer, just type your question in the comment section and let's begin this journey. All of you type ready in the comment box and let's begin this session. All right, so let's have our first question from Lalit. Okay, so Lalit is asking, many times, we are told that buy on rumors and sell on news. How to judge this? How to find such news which qualifies for this statement? So this is very true question. And most of the times why it is said, there is a specific reason behind it. Because most of the times what happens is before even the news comes out, a lot of people who are privy to the information are aware about what is happening inside that company, right? So think about the management. They will know what is happening inside the company, whether there is a new capex that is going to come up, there is a new launch that is going to come up. So they will be aware about the things which are happening. Also, analysts who are tracking the companies, meeting the management, seeing the progress of that company, they also know that something is cooking inside this company and they are tracking those companies closely. Of course, employees, you have distributors, you have bankers of that company, all of them have this information much before when it comes on the traditional news sources. And that is the reason it is always said that, buy on rumors where you don't have a confirmed news, but you get a grapevine from your sources, probably from some employees, probably from some distributors around what is happening inside the company. And this need not be insider information. It could be just like how many units of that company has got sold. It could be just a new product launch that is coming up in that company. And just by sheer network, you get that information. And once that news comes out, actually the profit booking starts because the overall news is generally priced in before even it comes in. And the way to spot it is by checking the price volume action. That if before the news there is a spike in the volume, there is a spike in the price, and the price is already moved up, the chances are that there is much lesser, profit left after that. Okay, so that is how you can judge it. And the best way to play this is by tranching. Like even if you are not sure whether there is upside left or not, you can actually take a small tracking position and then ride it further. Okay, so thank you so much for asking that question. Hope it was useful, Lalit. Thank you so much. Wonderful question. Now, Mr. Ravi Shankar Karadia is asking if ROCE is constantly delivering greater than 28% for consecutively 5 years, can we add such stocks? Very good question again. So ROCE, just for benefit of all of you, is return on capital employed. Okay, now what is return on capital employed? See, everything we measure in terms of ROI, right? If we put money into FD, we want to check what is the return we are getting, what is the interest we are getting on our money. If we are putting money into real estate, we want to know how much rental yield I am getting and how much capital appreciation normally I'll be getting. So you will always ask what is the return I'm getting on my capital, on my original money. And same way, you might have seen the subjective way also. Like when you want to decide reading a particular book, you might be thinking, okay, now which book will be useful more to me, which will give me more happiness, which will give me more fulfillment, I'll pick that book. If you want to even watch some movie, you will check that, okay, how much enjoyment I'll get from that movie, and I'll prefer that movie over other. And that is how the ROC is also for the company, that what is the return they are getting before taxes, and the denominator, that is capital employed, whether it is debt or the owner's money which is equity, that is in the denominator, how much I am getting. So versus FD of 8%, if I'm able to generate 28% return in my company, that's great, right? So no doubt about selecting such kind of company, but this is not the only thing which you should be considered. Okay, so I've created an entire video. It is on my channel. It is called financial ratios. You can just search financial ratios Vivek Mashrani and you'll get this video. Apart from ROCE, there are a lot of other ratios which you should be seeing and taking that judgment. And after all the ratios, when you have looked at, you will also need to check the valuation, whether you are entering at a right valuation or not, right? So ROCE, yes, it's one of the most powerful metric, but it should not be seen in isolation. Hope your question is answered. Yes, Ravi Shankar, thank you so much again for asking this question. So, is it good for Geo Finance long term? So, Geo Finance is a very, very tiny company at this point of time, right? Of course, it has a backing of Reliance and it is very powerful backing as such, but it is a very initial phase. So, you need to just watch how they are performing and what steps they are doing. But directionally, whatever they are doing so far it's just amazing. Okay, so thank you so much again for asking that question. Okay, can I start my fresh investment for long term in which sector? Okay, very good question, Rajesh. Again, I have a very powerful video. Let me see if I can get that topic for all of you. It's called Top 5 Sectors to Invest in. Okay, like this, again, it's on my YouTube channel. If you search Vivek Mashrani Top 5 Sector to watch, I've actually dissected all these sectors. One of them is financials, right, where all these companies like your asset management companies, your banks, NBFCs are growing and there is still huge opportunity. The second is your industrial company, which are predominantly MNCs and auto companies and all those core manufacturing companies. The third one is pharma, your chemicals, and your healthcare sector. That again has a huge opportunity size. The fourth one is more around tech side, and you might have seen like tech is everywhere. Now today we are actually consuming more tech, more technology, more screen time than what we consume as a food, right? And fifth one is more like around consumption. And again, consumption, it could be direct consumption like your FMCG company, but there are a lot of proxy plays of consumption. So I would recommend, after this session, probably just search with Vivek Mashrani top 5 sectors to watch for next 5 years. You'll get an idea of what all sectors you should be looking for long term. In fact, we go next level when we discuss this topic in our community. So in our community, we have a entire module called portfolio allocation formula. And in that module, we actually go much deeper in terms of how to allocate into these sectors, what kind of percentage of allocation to do, and how to diversify your overall portfolio. So not just concentrate into fewer sectors, but overall having a diversified portfolio is also very important. Okay, so thank you, Rajesh, again for asking that question. If all of you are enjoying it so far, we have just spent 10 minutes of learning together, but if you are enjoying so far, just hit a thumbs up so that I know that you are all attentive and you are enjoying and learning a lot from this session. And based on your feedback, I'll continue doing more and more. Last 6 months we have not done much of the session just because market was one way and I was too focused doing a lot of things. I was also writing my book, so we have the next book also coming up very soon, so I'll keep you all posted around that as well. Now let's take the question for Raghunath. Okay, so Raghunath is asking for a very high growth company. Even 100 PE is fine. Is that what some say? How to read this? If EPS is exponentially increasing, then any PE could be justified. So I would not say any PE. Okay, so always and always your entry price is important. There is no doubt about it. The lower the entry price, the better it is for you. So if you go into a very stretched kind of valuation, it is always going to be a problem in terms of returns, particularly if the growth goes away. Okay, so if the growth is continuing, there is no problem most of the times. But when growth company, it falters on its expectation. And expectation, I mean, if market was thinking that it will keep growing for 50%, even if it drops to 30%, market will punish it. And that time the de-rating actually is very risky. So my thought process would be, even if you enter a high growth company with a slightly higher valuation, I'm not saying exorbitant valuation, always have some kind of exit strategy in place so that if something wrong happens, you can still go back and be corrective mode. Like I'll give you the example of couple of such stocks, right? So if you see HDFC Bank, you might have seen the same thing has happened. If you check the monthly chart of HDFC Bank, this company had a very high valuation at one point of time, and then if you see, it did not deliver on the growth. So if you see last 3 years from almost January 2021 to right now, it is at the same price. What does that mean? It means that market is not punishing HDFC Bank in terms of derating, but it is undergoing a time correction. So market is actually waiting for earnings to come, and in a different way it is actually punishing it. Okay. So that is where there are two things which will happen if the growth falters and if you have entered at an exorbitant valuation. One, there could be derating which will significantly reduce your return. In that case, you need your exit strategy in place. And second very important thing is your time correction, where your compounding will stop for a very, very long period of time and it will wait for that earnings to catch up. Okay. So thank you so much, Raghunath, for asking that question. Hope you got your answer and you got it clarified. Superb. So Anamika is saying, sir, want to join your course. So we are actually not, making people join directly. We want you to actually just be, cognizant with what all we stand for as a community. And it is not only even course actually, it is more around community. So if you want to actually experience what is inside community, what we do in terms of process, how the entire structure happens, I've also shared the link in the chat section. Also in the description, you will find this link. Join our masterclass where you will learn the entire process. And if you feel you are a right fit, then you can decide whether you want to join this community or not. But I would not say there is any course. It is more like course plus collaboration plus live sessions plus mastermind. There is a lot of different things inside it. And we believe in holistic learning, where you not only just learn things from the recorded modules, but you also implement it live. So that is how we go about it. So Anamika, I would request you to first go through the link which I've shared in the description. Experience the thing. Only if you fit and you are a right fit for our community, we will be taking you inside. Okay. Thank you so much again, Anamika, for the nice gesture. Let me take the next question. So the next question is Ajay Kumar. Ajay Kumar is saying, I'm in Hackathon January batch and really excited to be finisher. So my doubt for today is, when doing core portfolio screening, what is the best parameter for financials? Okay, so guys, this is what I was talking about. So Ajay is actually part of our Hackathon implementation program, where we do live screening, where we do live filtration, we do stage analysis, lot of different concepts we implement. So what he's asking is basically in terms of financials. So non-financials, it's slightly easy and it's possible to do it quickly. But for financials, what are the criteria to use? So the first most important criteria for financials is ROE. Okay, all of you type ROE in the comment box. Just like ROC, return on capital employed, for bank, return on equity is the most important parameter. So make sure that you select predominantly companies which are more than 15% ROE. Okay, that means that that company has something good in terms of the returns. The second very important thing, profitability is one part. What is the biggest risk in the banking sector? पैसा तो दे दिया, but पैसा वापस भी तो आना चाहिए ना, which is called NPA, non-performing assets. Okay, it's called non-performing assets. There are gross non-performing assets and there is net NPAs. So what does NPA mean? NPA means that there is some money which is stuck from the loan which you have given as a percentage of the total loan. So आपने 100 रुपए दिया, 1 रुपया फंसा हुआ है. Even if it is stuck and you are not provisioned it, mane, you need to actually put some money aside, that what if this money doesn't come, can I pay my deposit holders? So that ratio is also very, very important. Another very important ratio is ROA, return on assets. Okay, so these three parameters you need to check if you want to go through the financials. Of course, you need to also check earnings growth, but more than earnings growth, these are the very, very important criteria which you should be using to screen your companies. Okay. And another thing which you can filter afterwards also after screening is called net interest margin. So what is the margin that company is making? So if I am getting from deposit holder in my savings account for 4%, and if I am able to lend at 10%, 6% is my margin. Okay, so what is the margin on the overall book I am earning? That is also very important parameter. So some of the very good high quality banks are able to command margin, net interest margin of north of 3 to 4%, and the NBFCs which are doing good and they are actually lending to relatively riskier borrowers, you might even see 7 to 8% ROs, your NIMs. Okay, so you can check companies like Cholamandalam and those kind of NBFCs. You will see that their NIMs are north of 6 to 7%, and banks like HDFC and Kotak, you might see that the ratios are more than 3 to 4%. So that is how the overall ratios look like. Yeah. So thank you, Ajay, for asking this question, and hope you got some pointers to execute in your hackathon. Let's go to the next question from Swaznok. He's saying, rights issue or bonus stocks or split stocks, are they worth buying? So there are two parts to it. Okay. Now, what is a rights issue? Rights issue is basically the company is giving you right to buy new shares of the company. So let's understand this very, very simple way. So say for example, currently a company has 100 shares. Okay. And now company wants more money. So either it can go to bank and get money, or it can go to new shareholders and get money, or it can go to existing shareholders who are holding those 100 shares and get money. So rights issue is done when they want money from the existing shareholders. Okay, not outside shareholders, not from the bank. So existing shareholders, they will say that, hey, I want money as a company. We are issuing 10 more shares. Okay, and you have right to buy those shares. Either you can say, oh, I don't have money, whatever shares I'm having, it's fine. And you can even sell that right. Somebody else who wants to purchase, they can pay you some small amount and you can actually sell those rights also. Or you can subscribe to it and you can say, hey, I want at this price, I'm comfortable, give me more shares. Okay. So based on the valuation, you need to take a call whether that right issue you should subscribe or not. Easiest thing to do is sell it, even if you are not subscribing. A lot of investors don't even know that they can sell their rights. Okay. And they lose out on this opportunity. The second thing, bonus stocks. Bonus stock is like a free stock. Okay, Diwali gift आता है ना हर साल, वैसे ही है कि भैया कंपनी ने पैसा बनाया, like a dividend you are getting a bonus shares. So you don't need to do anything. You don't need to buy. It will automatically come into your account. And split is nothing but you basically have a cake and you make two parts of the cake. So one share का दो share बन गया. So you don't need to even buy here and it doesn't change anything. Okay, only thing it changes is the liquidity. Now there are more shares which can be transacted. The price of the share goes down because now one cake 400 rupees का आ रहा था. Now two cakes हो गया, दोनों 200 रुपए में हो गया. That is how it is. Was it simple to understand? Just type simple, all of you, in the comment box. This is how you should all learn and understand finance, because a lot of people have complicated all these jargons, rights issue, bonus issue. TV में बैठोगे तो आपको लगेगा कि यार what is happening, all bombarding of the jargons, but actually they are very, very simple. Okay, so just to recap, rights issue is for the existing shareholders. Company gives option if you want to buy it. Bonus issue is just like a dividend. It's like a free gift. They issue more share and it comes at a zero cost. You don't need to pay anything actually. And third, split stocks are just split of the existing share. If it is a face value of 10, it gets split into 5 shares of 2 or 2 shares of 5 face value, and that's it. Nothing changes overall. Okay, superb. So thank you so much, Swaznok, for asking that question. Okay, how to calculate the fair value of any stock? So this is one of the most complicated topic. Okay, there are multiple ways to value a stock. The first way is you see its earnings, कि भाई पैसा कितना बना रहा है, and in future how much it will make, and you discount all the future earnings till today. Okay, that is called DCF, discounted cash flow, in a very, very simple term. The second way to analyze it is price to earning multiple. Okay, so you say, okay, earnings, this company is making so much and this much price I am paying. Just like how we buy a house, we say that, okay, this house is 5% rental yield. So we are paying 20 times of the yearly rent we are receiving. Same way, in the stock, you are saying that this company is earning so much, I am paying 20 times of that earnings. Now, how to know that whether that 20 times is a fair multiple or a cheap or, expensive? So one way to do that is to compare with its peer. That, okay, this particular company, say Colgate, is into toothpaste. This particular company is trading at 50 times PE, and other players also in this sector who are similar in nature, similar in size, similar in growth are also at 50 multiple. That means that this company is fairly valued. Okay. Now the problem is we don't know the future. Some of the peer companies might have slightly higher future growth and they might be at a fair value, but this company might be having future slow growth and this could be overvalued. So it gets very, very subjective and complicated that way. Okay. Another thing to look at is historical price to earning multiple. That, okay, this company in their lifetime, it has been trading in the range of 15 to 20. So that is probably the fair multiple of this company, but now it is trading at 30 times. So probably versus history, it is right now expensive. But again, there is a problem there. What if earlier the company was a different company, it did not have much of product, it was not growing much, but now it has started growing. Now it is having bigger product portfolio and it justifies that 30 times PE multiple. Okay. So that way is, valuation and getting into a fair valuation is art and very, very complicated topic. What we do is we don't go precise in terms of fair valuation. Broadly, if we feel that, okay, it is broadly okay in terms of valuation and it is not overheated, we would love to take a small tracking position and see if market is also feeling the same. And if it is really a cheap or fair valuation, ideally, based on the growth, it should go up. And as it keeps going up, we keep adding positions into that, right? So it's slightly counterintuitive way of doing things, but we want the support of the market to also, help us in going forward in this entire journey. Yeah. So thank you so much, Endless Kumar, for asking this question. Yes, Mahalakshmi is saying, sir, how to identify stock that takes good move in coming trading session. So what we do inside our community, we used a tool called ridewinners.com. Okay, so we do basically two things. So we go to Ride Winners and we want to first see that which are the sector where there is good price volume action happening. Okay, so let me see first sector. Okay, so you can see there are 12 companies in that sector. This represents the total number of the companies in that sector, and this represent number of or the percentage of companies coming in that sector. Okay, so I'll just zoom it a bit for all of you. Okay, so now you can see that 83% of the companies are making price volume action inside this sector. So I'll go inside this and I'll see which all companies are coming again and again in my screen. So you can see like RITES is coming multiple times. It is also forming a 52-week high. Even RailTel is coming multiple times and it is forming a 52-week high. And I want to cross check that with price volume action. Okay, so I'll open couple of charts so that you understand what is price volume action and how to see this. Okay, so now once I have decided that, I'll go to the daily chart and I want to confirm that there is some kind of pattern forming. So you can see that there are two patterns forming over here. Okay, so are you all able to see this rounding pattern? There's a rounding pattern that is getting formed, and you see here there is a price and volume action that is happening. That means there is some kind of demand from the market. People are actually buying it. Okay, and it is also forming a new 52-week high, and also my price volume action signals are getting generated. Then I also see again, there is a tightness and again the price volume action is picking up. Okay, and hence this can be a good buy also. By the way, we actually in our research company, we actually published a research report somewhere around this levels by seeing the price volume action, and rest was the history. Like almost we got a 58% move in 7 to 8 days. Okay, so keep it simple, use like this. Same way if you see RITES, you will see the same phenomena. There is no difference at all most of the times which you will see in these kind of patterns. So if you see here also, there was a rounding pattern that started forming here, and this is where the price volume action started picking in. And you can see like within no time, it was almost like 40 to 45% return. So with these kind of simple patterns, you can actually start considering the stocks and you can take further position. IRFCs, it's still in our buy list, just as a disclaimer. And we have recommended this to our research clients. Okay. Good. So hope this was useful. Which was the question? Let me go back to my screen. And yes, this was question from Mahalakshmi, right? So this is how basically Mahalakshmi first see the sector tailwinds where majority of the companies in that sector is showing some kind of sign. Then go to your price volume action and then see whether there is a favorable pattern that is getting formed. Okay, so that is how we generally go about it and find it. We also actually did a sector, presentation on railways also. If you want to check that out, you can actually check in our YouTube channel, Vivek Mashrani railways. You will get a video also. Okay, so you'll get that video in terms of what we did in railway sector, and we did it last year. Since then, I think we had a lot of multi-baggers in that sector. Okay, superb. So thank you so much, Mahalakshmi, for asking that question. Hope it was useful. Let me go to the next. Yeah, so do you feel renewable energy sector is going to be next theme like railway? What are the stocks in your radar like stock Proxy plays? So in fact, renewables as well, we had this in our radar since almost 1 year. Okay, so let me see if I can pull that video also. Okay, so yeah, this is the video we did on renewables. Okay, so renewables energy we actually covered 1 year back. So now you might be seeing all people talking about it, but actually I've dissected deeper into this. So there are companies like KPI Green, there are companies like SW Solar, there is Vari Renewables, Borosil Renewables. Lot of these interesting companies are there in the renewable space. I feel it's still a good trend, but some of the stocks have already moved a bit. So you need to be careful in terms of what valuation to play. But this also, like last year itself, we have dissected it. So if you search Vivek Mashrani renewable energy or green energy, you will find this video and you can go deep dive into it. We have actually covered all the growth triggers, what all things are part of this sector, how we are spending as a country in the renewable space, and what is the kind of opportunity size. All those very, very powerful things are actually discussed there. Now in terms of proxy play, there are a lot of proxy plays which you can play. So you can play with a wiring kind of companies which are predominantly catering to it. You can also play through the smart metering, right? So if the actually solar energy, if you are putting it, you need to measure it. You need a lot of these meters also, smart meters also. So there are a lot of proxy plays you can play, and that is what I feel we should be doing as an investor, right? So rather than playing it directly, some of the proxy plays are really important and you can actually go about it. Okay. Lalit is saying thank you for this ask me anything and answering. Next question. Good. What should we approach pre-election? Since Modi ji's third term is confirmed, looking at the sentiment, what sectors to focus after election as per you? So what we do is don't get into prediction. Okay. Follow the trend. So wherever as a sector we get a price volume action, just like how I showed you the ride winners and some of the sectors which were coming, focus on which sectors are telling you to look at it rather than you looking at a sector. Okay, let me repeat it. Let market tell you which sector to look at rather than you looking at a sector. So by initial price volume action, you actually get the direction where market is sensing. For example, before this Ayodhya temple inauguration happened, market actually preempted that solar, something might be coming on solar, and of course if there are so big plans even in parliament, a lot of MLAs will know, and that information would have percolated. So actually before that announcement, for last 3 days solar stocks were moving up. Okay, So you need to think about like why solar stock are moving up. Then you think Ayodhya, then you think Ram Bhagwan, then you think okay, Surya Vanshi, so something related to Surya that Modi ji might announce, and that is the reason probably these stocks are moving up. So you go in the reverse direction. That is how you should think. Okay, and again, prematurely don't exit your winners and your trends. So if something is moving right direction, I was listening that mid cap, it's overheated since 6 months people are talking about, and since then mid cap index has also doubled. So if you go into that prediction mode, you will never be able to ride a big trend. So always go into a trend following approach rather than predicting which sector might go on and what will happen. But if you ask me, generally, infrastructure space performs really well in the proxy plays of infrastructure before the election year. I've been talking this in multiple media interviews also, but that is again a hunch and based on the data of the past. Market is always unpredictable, right? So you might see some new sector also emerging, but so far it has done well. But yes, that is how you should see and think about these sectors. Okay, so thank you so much again, Lalit, for asking that question. So let me take Ankit Jain's question. How to analyze new companies that are only having 1 to 2 years of history? Okay. How many of you think that this is a relevant question for you also? Just type me in the comment box. Okay, this is a very, very pertinent question that, okay, something which is just brand new, okay, which has just got listed, and you might have seen a lot of IPOs coming these days very, very prominently. Now, how to even take position into some of these sectors where you don't even know what is going to happen. Okay, so this is where there is a very important document called DRHP. How many of you know what is DRHP? Okay, so DRHP is basically draft red herring prospectus. So any company which is getting listed, they need to actually file DRHP. Okay, and what is there inside DRHP? DRHP contains anything and everything about the company. Right from what is the company doing, how the company is actually performing, what are the past 5-10 years of history, and all those things. So if you go to my channel also, let me just put this across. This is the video you will see. All you need to know about DRHP. Okay, so just type in Vivek Mashrani DRHP IPO. You will get that topic. I have actually gone deep dive and dissected the entire DRHP of LIC. Okay, in terms of how to read, what all sections to read, how to think about past growth, how to think about management. So any IPO, if you are investing in future, before investing, please go through that video. You will get a lot of insights. But to keep it short, Ankit, if company doesn't have a history in terms of listing, you will get still data back for 5 to 10 years in their draft red herring prospectus, and it is compulsory by mandate of SEBI, so they cannot escape it, and that is the gold mine actually if you want to research any company. Okay, so thank you so much, Ankit, for asking that question. Great question, and hope you got the answer. Now let's go next. How to enter before breakout? Is there any special criteria? What gives conviction for that? So what I do is I basically prefer patterns. Okay, so I'll give you a couple of examples where we entered, and as a community also a lot of members entered. So let's say we take a share like Lupin. Okay, this is again just an example. I'm not saying you go and buy it and just enter right now, but just understand the concept. Okay, so now if you see this chart basically started forming a cup pattern. All of you can see this, like very simple cup pattern, and this is where the breakout actually happened, right? So this is the place where it broke out from the entire base. There was of course some small breakout over here also. This is where you start getting the clues. Okay, so within the base, if you see that the volumes are kind of increasing, that is one sign that it is in the mood of upswing. Another thing what I do is we use a indicator called Shaktiman indicator. Whenever it starts turning green like that in weekly particularly, we get a sign that okay, this is probably a early entry. This we also played in another company called Birla Soft. Okay, so Birla Soft, if you see, exactly same way we played it. You can see the volume spike was there. This is where the entry actually came in, and after that there was no looking back, and it actually broke out the base over here. So it actually formed a cup and handle kind of structure, and then it broke out from here. So rather than waiting for 603 entry, just using this Shaktiman indicator, I can actually take much earlier entry. Okay, and this is how this is called low cheat entries. Okay, so basically you allow a cup to complete 60% and then start taking a position, and you don't go all in into your position. You basically add your position as it moves in your favor. So just in case if it doesn't work out also, you can exit that. Same way, recently one of the company we spotted was Ember. Okay, so this is slightly volatile company, but you can see the same structure getting played out in Ember also. Okay, so it actually broke out here, but the indication and the volumes and everything started increasing here. So the green volume here was much higher than this region. This gives us the clue that there is a lot of accumulation and buying that is happening inside this company. Okay, so this is called a low cheat entry. So if it is here, it is called low cheat. If it is here, it is called medium cheat, and this is more like a cheat area, and then you break out. So you basically are preempting that the cup will form and the breakout will ultimately happen. Okay, same we played in Glenmark. Okay, so I'll just show you Glenmark how it worked like. Okay, so this coupled with some of the turnaround sectors is a very powerful combination. Okay, see this, like crazy, right? So here it started turning around, and then entire remaining percent we were able to ride it. Okay, so this is how you basically try to preempt that cup formation. You try to preempt a breakout and then take the position. Yeah, so that is how short question, long, in-depth answer. So all of you, if you are enjoying the depth, see, I don't like to go superficial. Oh, 5 minute mein video khatam kar do. That is not what I love to do. I love to go deep dive into the question and give you absolute clarity in terms of what you are doing. Okay, so hope you are enjoying it. Can we take 3 more questions for today? Is it okay if we take 3 more questions for today? Just type yes in the comment box. Yes, so let me cover. Yeah, so how to understand which sector are going to pick up? Again, same strategy which I showed you. So we basically see the price volume action and try to see which sector are coming prominently in our price volume action. Okay, so that is how we basically try and catch the upcoming sector. There is no other easy way to go about it. Okay, and this also is a probability play. There is nothing like 100%. A sector which has come in might also, start underperforming afterwards. Okay, and by the way, if you are not following me on Twitter, make sure you go to @Mashrani Vivek. Let's connect for long term. Let's keep sharing our learnings with each other. And if you have any questions later on also, you can also DM me on Twitter. So here is my handle. Please make sure you are connected, and also if you are not subscribed to this channel, I'll be more active in coming days, so please make sure you are connected again on this channel. Let me go to the next question. Okay, so Madhu is asking how to join your group. So basically, we have a community kind of structure where all the serious investors are actually learning from each other. They are sharing the knowledge, and it's more like what I say, more like a family bonding. It doesn't feel like you are doing it alone. It's much beyond that. And if you want to learn how to join this, you can actually go to this link and stay connected on our Telegram channel. Okay, so go to technofunda.co/telegram. We can stay connected on the Telegram channel. Okay, and I've shared the link of the masterclass also in the description. If you want to also connect on masterclass, that is also perfectly fine. Okay, superb. Let me go to the next question. I want to do short-term investment, what to do? So basically, there is a strategy called core and satellite strategy. Okay. This again I have covered in my video also, one of the video which is called how to outperform Nifty. Let me see if I can get that video thumbnail also for all of you. Okay. Okay. I think need to check. So just see, just type in the comment in the YouTube how to outperform Nifty Vivek Mashrani. There is an entire process which we follow. So basically, core is your long term. Okay. And this is where we actually want to ride it on a long term basis, all the compounding companies, and we want to ensure that we don't prematurely even exit that. So we follow generally monthly charts over here. And then second is satellite portfolio strategy. So satellite portfolio, basically what we do is we go into companies which are emerging, okay, emerging winners, and then take position over there. So it is also called swing trading at times, but swing trading doesn't look at fundamentals. We also focus on fundamental triggers. So we basically blend both the things, which is called technical analysis and fundamental analysis. So that is what I have been known for, Technofunda Investing Specialist, and that is how we go about it. Okay. So again, go through the link which I've shared in the masterclass. You will understand more in terms of how we do what we do. Yeah. So Kunal is asking your view on IT sector. So IT sector, particularly on mid cap, it is all cup formation. You will see so many companies which has actually formed that kind of formation. Let me show it to you. So give me names of some of the IT companies so that we can quickly do some charts over there. So let's go to the weekly time frame. In fact, let me go here itself and let's take some names. Okay, so let's do Saxoft. Okay, so let's see Saxoft what is doing. So you can see this is again like in a stage 2 turnaround zone. If you see persistent systems, again you will see like a stage 2, like a compounding journey. If you see, Birla Soft, this is also an upward trajectory. If we see CNX IT, okay, this is also an upward trajectory, and it is actually about to just break out from this zone. Okay, and this also, if you remove the large cap companies, this is even more powerful. Okay, so that way I think IT is just getting started in terms of the entire moves. Of course, it has built this entire base, but then after the base there could be a lot of room that might be left out. Okay, so I'm feeling right now the IT sector is still has some steam left, particularly in the mid cap IT space. Okay, let me say, yeah, Chavi is asking, while trading stocks for short term, how to know exit point. So I follow a simple process. What I do, Chavi, is I use this indicator called Shaktiman indicator, and I'll give you some examples in terms of how I've been able to exit a couple of positions. So let me pick up my recent some of the stocks which I played recently. So let me share a couple of them. So if you see likes of Polycab, okay. So Polycab, if you see on a weekly chart, it was in a long trend, and you can see whenever this news came, in fact, it started triggering exit. Okay, this is where it started triggering exit. Same way, if you see some more companies like say BSE. Okay, now this I am riding on weekly, but if you do a daily and say you are riding on a daily chart, this entire trend, okay, this entire trend it allowed you to ride. Okay, so this entire trend, it was green, and this is where as soon as it started going into a consolidation phase, it triggered an exit. Okay, so if you are doing swing trading, ideally daily time frame like this might be very powerful, where you can ride such winners over a long period of time, and then your exit gets triggered. Let me see if I can take a few more examples from my list. So let's take example of let's take example of Mazdok. Okay, let's take Mazdok, which is the first company here. Now if you see, same thing happened here. So it actually broke out at this zone, and for entire zone it was letting you ride, and then it triggered the exit. Again, it breakout happened here, but then the breakout, there was no follow-up move. So again, it got exited, and this entire zone you were out. So this way, either daily or weekly, you can actually play it. Same way, if you see previously, companies like let's take Canara Bank. So if you see companies like Canara Bank, it had lot of volatility in between. Also, it takes you out over there. If you see some of the performing companies, like say for example, your companies like REC, okay, so REC Limited, it's so peaceful to play these kind of companies in the weekly chart. So you can see like here the breakout happened, and after the breakout there was no looking back. It actually did not trigger any exit. So from 126 to 499, single way your system did not trigger exit. So one, it of course helps you to exit when things are not working out, but second very important thing is it also helps you ride your winners when things are working out. Okay, so Chavi, hope you got your answer. Thank you so much again for asking that question. Superb. Let me see if I can take probably one or two more member questions. So Savita is asking how to get access to this indicator. So it is very a private indicator. We give it to our premium members inside our community. So only our community members by invite they receive this indicator access. Okay. So Mohit Arora is saying how to join your community. So Mohit, what you can do is go to the description. There is a masterclass. Attend that masterclass. If you are fit for the community, you will be able to join it. Okay. And others also, there is a special gift which I want all of you to give, which is a special Excel which we did in 2024, which will help you to analyze a lot of these companies. Okay. So you can go to technofunda.co/Excel. And you can even download this Excel. This is like a special gift from my side, just because you are here with me for almost 50 minutes without any break. And thank you so much for being with me. Okay. Let me see if I can take any other one more question. Yeah, so Nitin is saying, sir, earlier in India, we used to consider PE between 15 to 25. Now with all-time high, what we can consider investment PE and need to look at sector leaders and then invest. So broadly, I think that PE range again still holds true, because as a country, although we are growing, we are not going so fast that it justifies 30, 40 PE in terms of market. Now, of course, this needs to be looked from the stock specific perspective. So this range which you are giving is from the India perspective. But if you see, there are a lot of mid cap companies, there are a lot of small cap companies, because of the formalization, because of a lot of, tailwinds and a lot of these black money going out of the system, they are getting benefited. So that demand and growth both are there. That is the reason, more than looking at broadly in terms of indices, I prefer going much deeper. I prefer going more stock specific and seeing the growth. So there is a very powerful ratio called PAG ratio, okay, PEG ratio, and I've covered this again in our ratio analysis video, which I mentioned to all of you. You should go to that video and watch that for sure. Let me show that video again. Just give me a second. So this is the video I was talking about. So there is something called as PEG ratio, which is PE by growth. So what is the multiple you are providing for the growth which this company is doing? And that is how you basically bypass just the traditional way of looking at things, and also go much deeper in terms of actually analyzing that company at a much deeper level. Okay. So hope that answered the question. Thank you so much for asking again. So let me see one more question. Yeah, so this is from our community members regarding the assignment. So I'll answer that. So do we have to submit all the assignment of hackathon together or after each session? So what we do is, after each session, you will be told to put those assignments below so that I can review it in the next session. But just in case you are not able to submit it, in the end we will give you a Google form where you need to submit all the assignments, right? So you can pretty much submit it at a later point, and that will be your individual entry. Right now we have a team entry, later on it will be individual entry. Yeah. So thank you so much again, Ashish, for asking this question. I cannot stop myself from taking the question, but I'm just scrolling through if there's any important question which I've missed out. And by the way, even if your question is not answered, you can always follow me on Twitter and you can DM me. More than happy to answer it and help you in your journey. And if you're not following me on Instagram, you can even follow the Instagram. Okay. So let me take next question from Brijendra. So Brijinder is saying, I'm in January 24 hackathon batch and have learned the stage analysis. My question is, how do we analyze stocks which are 2 to 3 years old in the market? I think we have answered this question. So basically, there the stage analysis will not be applicable. You might need to only depend on fundamentals there. Okay. So that is the constraint which we will have. Of course, if there is no chart, we cannot analyze the chart, as simple as it can get. Okay. So good. Thank you so much, guys, for being till the end. Hope you enjoyed this session. We'll do it more often if you liked it. So if you hit a thumbs up, I'll know that you liked this session, and we'll do more often. Okay. So thank you so much all for being here till the end. Hope you enjoyed the session, and we'll see you in the next session. Bye-bye. Take care and enjoy your remaining day. Bye-bye.